Hey traders, happy Monday. This is Chris Pulver here at Market Traders Institute, and it's time for a weekly outlook. This is the week of August 26th through August 30th. And what a crazy 48 hours it's been since the market closed on Friday to the market open Sunday night in Forex. And just to take a quick review of Friday to Monday, what has happened. We also have G7 meetings going on right now. Today is day 3. Basically, last week we had China announce it's increasing tariffs to $75 billion worth of stuff that the U.S. or that it buys from the U.S. This includes cars. Then President Trump responded with a tweet, so this is all via Twitter, that who is the bigger enemy? We had Jerome Powell speaking at the Jackson Hole Symposium last week, and without missing a beat, Trump tweets, who's the bigger enemy to the United States? China's President Xi or the chairman of the Fed, Jerome Powell? So, I actually was on Instagram and Twitter and Facebook last week, and I said it was kind of the sweet and sour combination because it was, Powell is trying to talk about what the Fed's willing to do. They're not overly excited about rate cuts. You can clearly read that in their narratives, but at the same time, the Fed is still willing to ease. The Fed is still willing to cut rates. I just don't think it's to the extreme that the market is wanting or needing. And so, things move very quickly with risk aversion, and you can see that type of reaction like last week. We just had a straight down move in Swiss franc pairs, a straight down move in yen pairs, and we sit on that for the end of the day on Friday, and then Sunday night comes around, I see gaps in the Forex market, I see tweets coming again, I see risk aversion all over the place, and then I just take a step back, say, okay, let me give it till the end of day Monday. And where are we at? We've seen huge recoveries already. Now, again, I'm not saying this is the bottom by any stretch, but I'm saying that August is a volatile month, and we are seeing it firsthand on a day-to-day basis. And I read some interesting articles over the weekend, and it says something to this extent. The hardest thing for the market to do is have certainty right now. So does that mean that things are going to get better before they get worse? Maybe, maybe not. Does that mean we're going to have to deal with, day-to-day fluctuations and day-to-day volatility? Probably. So whatever that looks like for you in your portfolio, that's what type of steps you need to take. I am trying to kind of recession-proof my portfolio. I'm trying to volatility-proof my portfolio. And, for some investments and stocks especially, I want to make sure that I'm properly positioned for any type of drop in the stock markets. That is, whether you're buying the VIXY or you're playing inverse ETFs or you're just holding positions and going to cash. It's okay to buy later versus watching a 10, 15, 20% correction that just kind of comes out of the US and China trade war because they can't get along and things escalate. Nobody wants to experience that. As a Forex trader, we've seen some amazing technical levels that are setting up right now. JPY levels are sitting at, significant weekly chart supports and monthly chart supports, and you're looking at, 15 to 20 years of price history that is valid. And so when I get into the charts here in just a little bit, I want you to notice where they are sitting for these Japanese yen pairs, where we're sitting at some of these Swiss franc pairs. And from a technical standpoint, it looks like things should be getting better. But fundamentally, it's going to take an effort from the market to buy in and commit to the idea that the U.S. and China will work it out. And they did this last year. You start to see the drift higher and higher until the Fed had a dovish rate hike in December 2020 or 2018, and then just recently in July they had a hawkish rate cut. So, like I said, whatever steps you need to take right now to recession-proof your portfolio, volatility-proof your portfolio, look, we're still traders at the end of the day. We're looking for opportunities. We want to make money. The hard part is we're not really getting much consistency. I would say that the uncertainty is the only certainty. The volatility is the only certainty. We don't know what's coming from Twitter day in and day out. And although that is crazy, that's what's driving the markets right now, that is what's driving the markets. And, if you're trading small and you're position oriented, then you're just going to weather the storm and deal with it. If you're going for day-to-day opportunities, it's hard to predict this type of movement. It's hard to predict tweets. They come out of nowhere. They come when the market's, at a standstill in the afternoon. They come when random times during the weekend. It's like all these things are out of our control. So it's a very important time to make sure that you are managing your equity, managing your risk, and trading and planning accordingly because, things can change very quickly. We know to the downside, it just seems like the market is reluctant to sell off because of all the forces at play, but at the same time, it certainly can happen. And this could be something more than what we're looking at. Maybe it's not just on the surface as U.S. and China. Maybe this is deeper into 2020 with the presidential election at stake. I don't know, and we can talk about that this week in the Flex Trading Room. For right now, this is a weekly outlook. I want to show some currency pairs, show some directions, and see where we're at. So let's go ahead and take a look at that. Before I get into the markets, this is me. This is Chris Pulver. If you want to follow me, these are respective social media outlets. Instagram, @pulver.chris. Twitter, @pulverchris. Facebook, YouTube, just type in my name, and that's my email, cpulver@markettraders.com. Feel free to reach out to me and contact me. You can message me, and I'm happy to take some feedback and also some questions as well. I'm happy to answer them during sessions like this. I also have a mailbag segment for anybody that's contacting me. So let's get into the live markets right now. Take a look, and here we go. So let's first start with the SPY. We're at 287.73. Let's go to the daily chart. And this is the larger look. If you've seen me for the last couple of months, even going into 2019, I had this broadening formation already set. And this is kind of the magical area. I think that the banks and the current state of central banks wanting to ease and stay somewhat accommodative is what's going to keep this volatility afloat and keep this market potentially drifting higher into the end of the year. But you can see that it's trying to flirt with these lows, and those lows were from a little scare with, again, U.S. and China trade war talks. This was the end of July, early August, the low right around 281, and if that low breaks, that would be a major low that if we can confirm with a daily candle breaking below this, then I would expect any type of indecision and volatility to still continue to unravel to the downside and take out some of these previous lows. Now, from there, we'll probably have some type of retracement and recovery that comes back up to this level, but it still ends badly, just like we had here. We had a low, it made a new low, and we came back and fought, but it still ended badly. That was about a 19+% correction last year from end of December into early 2000. Well, actually, that bottom was December 26th. The market was closed on the 25th, and the market had a V-bottom the 26th and didn't look back. So anyway, this low from early August, this is roughly August 4th, August 5th. We got to watch that low very carefully. That to me would still mean risk off. That would be safe haven trading, things like that. But because we have central banks that are cutting rates, because we have the Fed that is willing to cut rates, they're probably going to cut rates in September. And then the question is, will they also hint at maybe cutting rates into December? At the end of the day, the global central banks, the Fed is still kind of the global central bank. And, we saw this in 2016 and 17. As the Fed was shrinking its balance sheet and going into tightening cycles, they mentioned for months and months and months they're going to start raising rates. And sure enough, they did. In 2018, they raised rates 4 times. Now, the other central banks were following the narrative, but not many other central banks raised rates. The Bank of Canada raised rates where they're currently sitting at 1.75%. The Bank of England raised rates, they're sitting at 0.75%, but then they're dealing with Brexit. So now in 2019, we've seen a complete backpedaling of central banks. They've been cutting rates. The Fed just cut rates. The RBA has cut rates. RBNZ has cut rates. The Eurozone is looking at cutting rates, or the ECB. Swiss National Bank probably going to cut rates. Japanese Bank of Japan will probably cut rates if needed. All these central banks are willing to cut rates. Does it mean that's the right answer? Does it mean that's the solution here? Probably not. I think this is going to delay the inevitable. All right? So as long as we're ready for this. Now, we can get ready for it now if it's going to be, just fast and furious and pull off the Band-Aid and just let the blood flow, or we deal with volatility and uncertainty and all this crap for the next, maybe 3-4 months. And that is a very likely scenario. So this is what I'm trying to mentally prepare for. And traders that follow me, same thing. It's like we'll probably have to grind through the noise here in the next couple of months if we don't have any obvious breakouts. And for this, if this is an obvious breakout, well, hopefully it's an opportunity. An obvious breakout bearish looks like we're heading lower towards these lows. From there, we might have a retracement, but that structure is the backside of the trend line, will probably fall from there. It might go sideways for another couple of months, but it still looks like it's ending badly. But if we don't break those levels, then this could be volatility, and it just stays here and finds a way to gather some momentum once again, maybe even testing new historical highs on the SPY. We'll see what that does to the Dow and the NASDAQ as well. Now, all that leads into currency trading. If the market drops right here, if this drops bearish, then that means we're looking at Japanese yen strength, Swiss franc strength, probably dollar strength as well, but mainly Japanese yen and Swiss franc. Those will be the highest volatile pairs to trade, with most likely some bearish direction or just favor the strength of the JPY and the Swiss. If we have these levels hold and the market starts to climb, expect some strength in the Aussie, which would be a nice technical recovery. Strength in the CAD, strength in the New Zealand dollar, all technically looking for nice recoveries. The pound as well could continue to make some recoveries in the short term. There's still the thought of Brexit. There's still the scare and uncertainty of Brexit with Boris Johnson on that collision course and a deadline October 31st. So the pound could be in a unique situation where they need to make something happen. Has the market entirely priced in Brexit or hard Brexit? Maybe, maybe not. We don't know yet. We saw a huge drop, obviously, in the pound from May until now. There's still room further to the downside if just there's a complete offloading of the pound in general. But that really would be a scary situation. We've talked about in the trading room. That could be full-on contagion. That could cause the butterfly effect or the ripple effect where it just disrupts everything. So it'd probably be better and less consequential to have a soft Brexit, even if there is one, or literally no Brexit whatsoever. But we don't know that until it happens. So like I said, buckle up, be ready for some volatility. Let's talk about some trades and directions right now. So let's start off with the yen pairs, because this is an important way that I closed the week on Friday last week, and this is why I waited. Now, I had chart alarms going off all night. I had chart alarms sitting here at this low. I had gaps that I noticed on the smaller time frames, and I'm thinking, oh my gosh, here we go. This thing's just going to move without us. But what happens? That is a V bottom. This was the break and the close lower. We had gaps lower. The market ended up responding all the way back to where we had the breakout last week. You can see that the Aussie yen came right back into it. So at the end of this nonsense, you still see that price is inside my yellow box. So for me, there's still nothing to do. I need to see, does this currency pair want to break and close higher or want to break and close lower? You see that this is a long wick to the south. It's not a confirmed close lower. It's not a confirmed close higher. It needs to close up or down for me to say, I'm going to take a breakout trade. This is literally the same look on all yen pairs. So this is Aussie yen. Keep this visual image in mind. Aussie yen right there. CAD yen, 80.07. Look at our yellow box. We had the big spike to the downside. Look at the wick. You can see the candle is still stuck inside. There's no trade other than some scalping. If you were, if you had the guts to buy those gaps last night, you had a pretty amazing start to your Sunday, Monday, because everything recovered in full. Now I look at this from a higher time frame and just let the day settle in. To me, this means no trade. I'm still looking for price to close higher or lower. Look at your Swiss yen. Same thing. There's your wick to the south, still in the yellow box, no action needed. Euro yen is close. If we take a look at the currency strength chart, and I'll go ahead and refresh this, you're going to see a lot of volatility from last night. This was the spike up JPY when the market opened. JPY spikes up. Not a ton of volatility, but you have a big drop and big gap in the Aussie, New Zealand right when the market opened last night. And then right after this, here's JPY on top, and it starts to get into the weaker threshold. So this is your currency strength chart. This is your Japanese yen and your Swiss franc giving back a lot of movement. So this is weaker JPY, weaker Swiss franc, and look where it is now. Weaker Swiss franc, weaker JPY. So, 100% recovery from the Friday close to the gap lower and all the chaos that ensued when the market opened on Sunday night, or if you're in Asia, Australia, New Zealand when the market first opened. But here we have Aussie on top. Here we have New Zealand back up. CAD doing well. There's the dollar. Then we have pound euro in the middle. But Swiss and yen noticeably weaker on today. Why? Well, seems like China and US want to talk. So it's just constantly back and forth. It's a mess. We trade the technicals, but we're clearly doing with a lot more fundamentals. So what do we have here? Euro yen. Look at the euro yen. Did it close lower? Last Friday, there's no way that I'm just going to take a sell trade on a Friday end of day. And if I did, then I would have been wanting to close first thing on Sunday when that market gap. But you can see if you go to a smaller time frame, look at how quickly this responded. This was the close last week. Okay, last week Friday, the market closed and we gapped lower. So immediately once it gapped, your spreads are going to be high when the market first opens. Brokers rarely have spreads that are normal right when the market opens at 5 p.m. my time. I'm in the Eastern time zone or Eastern Standard Time. But nevertheless, it gapped lower. That was still a big gap. That was like a 50, 60 pip gap. Big spike up within the hour. And then 1, 2, 3, 4 hours later, fill the gap. And then by the time we started the active zone today, it's back up in the yellow box where we know that it's just consolidation. Okay, look at your pound. Or New Zealand, let's go pound yen. Yeah, pound yen here. Pound yen, same thing. Okay, pound yen actually had, so interestingly enough, the pound last week has been moving to its own beat. and own cadence because we had the pound getting a little bit stronger in the short term. This was your close last Friday. This is your nasty close there. I would not, well, personally, I'm not going to trade the pound yen. I don't want to have, I'm trying to limit, any and all pound exposure. I'm currently in pound Swiss. I'm currently in euro pound and pound dollar. Those are all really small positions. And if I can limit or reduce a lot of that exposure, I'm going to. Pound yen is probably not going to be an instrument that I trade. But still, I'm watching other pound pairs, but I'm also watching those yen crosses. This to me is not where I'm looking to trade. If this closes higher, okay, fine, but where are the other yen pairs relative to this yellow box? If I have all of my yen pairs outside the yellow box or outside the yellow box, that's my next trade. The pound yen is not going to be my gauge or barometer for that. It's just going to be one of the other ones. The New Zealand yen, it looks a lot like the Aussie yen. You can see the wick low to the downside. Price is closing back within that yellow box. This is still a no trade zone. This could be signaling a V bottom that gets us back up to this yellow box high. I know that's tempting to want to follow this trade, but I don't want to chase. I don't want to chase it to the downside. I don't want to chase it to the upside. I just want to see, can the market close higher or lower? Can it close outside of this? Can it close outside of this? I will be watching this low very carefully. This to me is a low that's just a wick. I want to see where price closes. If price closes lower, we can sell it. If price closes higher, we can buy it, right? And the fact is, we might have this, today's recovery ends up pushing back down and closing lower. It might come right back and test the lows from the gap. So we might still continue to go down, but I want to see if price can give us the opportunity to close. That way we put a stop loss in and go towards these lows and grab some profit. If it goes lower, then move your stops and become trailing stops. It's not that complicated, but we're just waiting for some nice daily confirmation. At least I am. Dollar yen, same thing. Dollar yen had a crazy big recovery from last week. Still inside the box. There's a huge spike down, all wick, and no confirmation. But look at this on the 1 hour chart. The market giveth and taketh. This was the giant drop straight down last week, post Jackson Hole, Trump's tweet, all the back and forth between China and the U.S. last week with escalation of tariffs. It drops, it pauses, drops again. There's your gap lower, and you instantly fill that gap. So like I said, it took some guts, took some courage to trade that gap last night, but it worked out if you did. I didn't. I just kind of looked at my phone and took a deep breath and said, all right, I'll come and check it in the morning. And sure enough, we're right back where we started. So I had probably a $3,000 or $4,000 swing on my equity just waiting for this to play out in my favor. I mean, this is all good stuff. But anyway, so that's where we're at with the yen pairs. What do we look at for other currency pairs? Currently, we're sitting Aussie CAD at right around 9,000, and on the right side of the trend line, I'm still looking to see, can we get this pair to this monthly pivot and higher around 91. Oil is still a factor here. Clearly with the U.S. and China spats, the Aussie is affected. When we see that direct tie between China and U.S., if it's negative, then the Aussie tends to get very weak very quickly. Oil is still at a make or break point between $50 support and $60 resistance. So, in a way, this is kind of a wild card trade. If we have good news coming from the U.S.-China talks, then this pair wants to recover. If we have the wedge that I'm looking at, or the consolidation I see in oil, if we drop one way or the other, or rally one way or the other, this will affect this currency pair. I do have a medium-term outlook on bearish oil, and if that's the case, this Aussie CAD should be able to find this pivot and recover more back up towards 70, or this is actually 9,200. But for right now, you can see it's back and forth. There's a ton of indecision between 89.50 and roughly 90.50. So we're in about 100 pip range right now with a lot of volatility, but yet no traction, no direction on the Aussie CAD for now. Aussie Swiss. Technically speaking, this is a great double bottom. I am long. We're on the right side of the trend line. I'm holding long. I'm trying to get this pair back towards 6,800. Ideally, I'm trying to hold this a lot longer towards 7,000, but I will be very pleased if I can take some profit right up here around 69.50. I've got some small positions in. I've taken an add-on trade at the bottom, and if we're going up towards 69.50, that gets me to this high. 7,000 is a nice round number. I would gladly take some profits there. I'd love to hold this more medium-term, long-term, but for right now, if I've got a net position up 200 or 300 pips on 3 or 4 positions, I'd be pretty happy with that as well. Aussie yen, we did. Aussie New Zealand, I did get a chance to buy the dip last week. I keep telling traders with this currency pair, I'm buying every single dip that I possibly can. We did actually start this week off right at a monthly, or actually a weekly pivot, which is right here. And so I had a pending buy, and it was filled. So there's last week's pivot that was still missed by just like a pip. I did buy this near the low around 105.50. And so that little add-on trade is up a decent chunk, and I'm still going after 10800. So I continue to add positions here. I'm not saying that I'm not necessarily done adding, but I have accumulated a pretty solid position all in this area, all in this area, and I've added on quite a few trades in here. So I think I'm going to let this coast a little bit and see if this is enough to go higher towards 108. From there, looking at a decent chunk of profit, a huge chunk of profit actually, but you know, it's been a long time coming, and I'm sitting on this trade for 8 months, so it should, you know, it should pay out. But anyway, I'm just waiting to see, does it offer up chances to buy? I'm looking at buying pivots. If I buy the daily, buy the weekly pivot. This week's pivot's hit. Last week's pivot was just a pip away, but just want to see if we keep steadily going to the upside. These highs are 107.25. If we can get above those highs, 10800 is my next destination before I consider taking some profit. But all things going pretty well with Aussie New Zealand right now. Aussie dollar, another one that bounced off the lows. We have equal lows right there. Decent little double bottom right off those wicks around 6,700. And we still have a crazy pivot cluster between 5 dailies in a row, a weekly and a monthly sitting right there around 69.50. I do hold some small long positions on Aussie dollar. I'm really just trying to trade this channel. Just like we had going over here, it did stay sideways. If we stay sideways right here, I'd like to see just a little bit of movement from this channel support to this channel resistance. 69.21 is a big number. That's the 5th daily pivot in a row. That's just shy of the 69.50 weekly and monthly pivot cluster. That's a price target for me. If I get to 69.21, my positions that I currently have are going to be profitable. I'm going to protect those profits. CAD Swiss. Took some profit on this one last week. I posted this on YouTube, or actually posted this on Instagram and Twitter and on Facebook, and it was just a nice simple trade with my perfect storm strategy that was up. I mean, collectively, it was probably up about 115, 120 pips. I'll show you the strategy right here. It's on the 4-hour chart. I did accumulate some positions on the sell side. It wasn't a ton. It was maybe 4 or 5 positions. It was a sell trade there, sell trade there, sell trade there, and we had the the Trump tweet last week. I closed it right there near the lows. This was the gap lower. We've recovered. So I did manually close this trade out, and I actually illustrated that in my Flex document here. If I go into my Perfect Storm tab, closed manually with Swiss franc. It was about 300 net pips. Ended up making like 600 bucks, and I thought it was a good time to close because it just dropped straight down. Now, when I look at the medium term, I'm just going to hold the CAD Swiss. I'm trying to buy lows. We still have a couple small positions here, and I'm looking to take some profit up towards 7,600. If it comes down to the lows, it's still channel support, channel resistance. So play the channel, play the structure on CAD Swiss. CAD Yen we did, Swiss Yen we did, Euro Aussie. We do have a trade running for my trading room on the Euro Aussie. I would love to see this pair with this high that's a failure of this high. I would love to see this get back down into previous lows or this nice little pocket around 6,200. Now, I think this is probably a safe trade for me just to get out of. This would have been an excellent double top. We would have been filled right there and we'd be up profit right now, but it didn't, right? We didn't get filled at the double top. It wasn't quite technically a double top. So if this heads down into the same low we saw a couple weeks ago or last week, and it goes down a smidge lower into this 6,200 pocket, I am probably going to take a break even or close this trade or move my stop to +1 or +5 and just get out of it. If it continues to go lower, that is fantastic. But with all of the volatility right now, if I can limit some of the exposure, and this wasn't exactly a good entry because it was a crazy 1,000 pip move to the upside with everything that escalated from US and China. So just to make sure that I'm not dealing with any crazy volatility, I'm going to go ahead and limit some of this exposure. I might even take a small loss. If I get this inside, let's say 100 pips. If I'm less than 100 pips upside down, I might just close this trade and not deal with it. I'll take a small loss. It'd be 50 bucks or 100 bucks, give or take a position. It's not a big deal at all. So that's probably my outlook this week. I'll talk more about that in my trading room. Unfortunately, like I said, we didn't have the gap high enough to fill that double top entry, which we would be in net profit right now, and we'd be talking about protecting profits. But instead, we're looking to see, can we get back to these lows? Can we get back to 6,200? If we get there, maybe grab 20, 30, 40 pips. If it goes lower, try to let it run. But don't want to be too silly on a pair that can be highly volatile. Euro Canadian, nothing to do on this one right now. Just kind of patiently waiting to see what happens next. We are looking to break the upside, but I might end up looking to buy this week in the trading room if we come back into this area. Maybe buy around 4,600. That if we hit 46, I'd look for a buy trade. Other than that, I'll just focus on the CAD Swiss, which is the inverse relationship to the Euro CAD. Euro Swiss, 108.76. we have some really good technical alignments on this one. I am currently long on the Euro Swiss and holding. What I'd like to see is, if possible, that we start carving out lows around 108.50, or worst case is we press down to 107.50, 10700, and then we have a full-on move to the upside. This could be a lot of intervention and manipulation by the Swiss National Bank. That's a great technical level on the weekly and monthly chart. If we don't really hit that low, maybe we have some type of spike here and then we go higher. All I'm really looking for is, can price break this channel? We've had this channel steady now since summer. This has been a May trend. So we had our break in April, trend in May, trend in May, trend in May. Whenever this starts carving out a correction, I'm looking to get this back towards 1100 or 1200, try to take some profit on the Euro Swiss. Euro Pound, 9083. Ideally trying to limit some of that pound exposure. I do like how this took out a recent low. So perhaps this is a 1, 2, 3, or this just continues to unravel a little bit lower towards 8,900 even. I believe this low is just shy of that, around 8,900 or like 88.90. I'm going to take some profit when I hit there. It's just around this green box. I keep staring at that. If we have price come out, I don't care if it spikes and touches it with a wick. I'm going to take profit as soon as this thing hits that green box. So I just want to limit some of that exposure and get out of this trade. Euro Yen. This one's nothing. Yen pairs we did earlier. Euro New Zealand, 7369. We're starting to see the recovery here as well. We actually did get filled at the double top on the Euro New Zealand. So this one is going to be very close to break even. So we have one position at 69.90, one position at 75.50, and our break even is going to be right in between. So if we get this to break even or better, like I said, with a pair that can be volatile, with the the uncertainty of U.S. and China trade war talks, or is it good or is it a bad day? We don't know. This one, if I can grab 30 to 50 pips, I'll probably be pretty happy with that. I might move a stop to break even, +5, +10, but I want to be pretty aggressive about protecting profit on this. So I'll keep an eye on that one for the trading room this week. I'll actually update the doc that we got filled at 75.50. Euro dollar. Pretty wild day from last week to this week. This was Friday last week. This is Monday. So just within, literally a day different, we have a lot of this movement coming back. Look, the euro dollar is just going to be probably the most painful trade ever. I want to see the bigger term take us into 1800. I don't know when it's going to happen, or if it's going to happen, or how long it's going to take. This might continue to chop for a while. The bigger move would be, we need to see such a weak dollar that this would have to break 1250, and then it can go to 1800. But if we have, every time the Bears score a point, they pull back. Every time the Bears score a point, they pull back. But they're still making lower highs for now. It is so choppy. The daily trading range is still pretty low, around 61 pips. There's, no sign of big optimism from the Eurozone. They're looking at possibly another quantitative easing package or cutting rates in September, just like the Fed would be. But if you look at who offers more yield, it's still favoring the dollar. So I don't have a good trade on the euro dollar other than waiting, or you are finding a way to scalp. I know that my perfect storm could probably do well with this one. Personally, I don't have it deployed in this pair because I'm waiting for something bigger in the dollar to happen. So anyway, that being said, we've taken some good trades on the euro dollar. We made some pips. We closed out recently for 50 pips and called it good. Now I'm just waiting to see what happens, something more clear, some more confirmation elsewhere, then we'll get a good trade. Otherwise, leave it alone. Pound pairs, like I said, doing my best to limit some of the exposure. Pound Aussie, I'm not in a trade right now, although I was looking for something around 8,400, 8,415. Look, don't unnecessarily trade it. Don't unnecessarily trade it. If you have a simple day trading strategy like our London daybreak strategy, it's pretty straightforward. This is 1, noon, 11, 10, 9, 8, 7, 6, 5, 4, 3. 3 a.m. London session open right there. There's a 3 a.m. candle, and it breaks to the downside. You are up around 200 pips. It's a simple way to trade. It has a stop. It has a take profit. You just trade it. Right? There's enough volatility on pairs like Pound Aussie, Pound CAD, probably Pound New Zealand to take some trades like this. You can get some bite-sized chunks of profit on the pound pairs when they cooperate, but you're also limiting the exposure and not dealing with positioning and Brexit. So that's kind of my prescription right now for pound trading is, it's day trading. Go for volatility. If you're using the momentum breakout charts, this is a sentiment strength line. If you're using the micro price detector, those are good ways to also day trade and just follow some directions. So there are ways to get the job done, enjoy some of that volatility without getting overly exposed. That's Pound Aussie. Here's Pound CAD. We're at 62. Still looking for a bit of recovery on this one. I did close this one last week. For a loss. I ended up taking about a 250 pip loss, which is not a big deal. And part of that was because I was holding on to a bad position at 69. So that's my fault for not getting back in. I'm still looking. If anybody's holding this, I know we had some traders that want to hold a little bit longer. 6,600 would be my safety, line in the sand, protect your profit, because it should be enough of a recovery from roughly 5,900 to 6,600. That's a big move, right? That's a big move worth of a correction that should allow you, if you built some positions, to take some profit or get out of this unscathed. I, for one, just opted to take the loss and not worry about it. So I'm out of this trade. Pound Swiss, I am still holding. Euro Pound, I am still holding. I would love to see the Euro Pound drop and the Pound Swiss continue to rally. We're heading back towards this outer trend line. Hopefully this is enough to get to this outer trend line and have one more push. That'd be a 1, 2, 3 wave move to the upside. Come back and retest previous support. Find these previous areas around 22 to 2300 and get out of this trade. If we come back any higher, awesome. But I'm not banking on this to go to 26 or 27. I'm just looking to see, can we get a cooperative wave pattern, get a 3-wave move, try to take some profit and be done with it. Limit the exposure, and then you can deal with all the Brexit politics and not even worry about it because you're not exposed. Pound yen, we did. Pound New Zealand, 91.20. A lot of volatility just like we saw on the Pound Aussie. Take a look at this one on the 1-hour chart. Where's your London session candle? This is 1, 12, 11, 10, 9, 8, 7, 6, 5, 4, 3. Indecision at the 3 EM. There's a break to the downside. You're looking at something around 9,200 for a sell, currently at 91.20. So roughly up 80 pips. Not bad. Just trading some simple day trading techniques. You can also look at your sentiment strength line, micro price detector as well. Okay, pound dollar, 22.20. And are we on the right side of this wedge? Let's take a look. Daily chart. Interesting spot for the pound dollar. Now, I do have a couple small positions in. I do have a pending buy at 1.20. Now, I don't want to have any additional exposure if I don't have to, but look at this. 1, 2, 3. If we have a 3-wave move, possibly back to 24, 2,500. Ideally, we get back to 27. I don't know if we're going to get that. We might see price, instead of going up like I had there for a wave pattern, we might have price do this instead, where we break the trend line, consolidate, come back down, form a double bottom. Then we have, one last chance to either come back and hit range levels or actually be the double bottom that creates this recovery on the right side of the trend line. So technically speaking, this does look like a good trade to recover towards 27, but fundamentally speaking, it is a wild card, and the pound is, anybody's guess as far as how Brexit will affect this, or if there's going to be a Brexit. We won't know until September, October, right? There could be more drama that kicks in, and it could be good or bad. We don't know. Again, playing it safe. New Zealand CAD, 84.75, just slowly and steadily drifting to the downside. I'm still looking for an opportunity to sell this pair, but I want to see if we can get a pullback first and then a sell. Pullback first and then a sell. That's my plan of attack on this one. New Zealand Swiss, I'm long on New Zealand Swiss, and I'm holding long just like I am with Aussie Swiss. I want to see if this pair can get out of this range. If we can get above this range high, looking for more bullishness to come back and retest 6,600 or 6,650. This is a great spot to carve out some lows. If you take a look at this daily chart and zoom out, you'll see here that we have support that goes back to 2016. Channel support, channel support, channel support. If that technically holds, then I'm gladly holding long. If we come down and drop down to historical lows, it's not that far away. It's only about 300 pips lower. I'm still going to buy this off the historical lows. But if the Swiss National Bank comes to play and they want to, weaken and depreciate or change even their interest rates and go into more negative territory, that will incentivize, anybody holding Swiss franc to get out of them, and we'll see that pretty quick movement. Hopefully that takes place soon. We'll find out if the Euro Swiss really wants to get back to 111, 112, and if so, then the Swiss basket will weaken as well. New Zealand yen we did. New Zealand dollar, 63.90. And not on the right side of the trend line yet. You can see a long wick to the south just below this RBNZ low. I'm just going to make a tiny little adjustment right there. But price needs to close above. If we see a bullish candle or a bullish body of the candle closing on the right side, we can take a trade with a stop loss there, go after some recovery. This is a pretty strong level of support, and support, we can come right back up there. We can also recover even more so to where this aggressively fell around 6,700. But I need confirmation first before I jump in and buy this. Dollar CAD 32.61. This one is pretty wild and crazy. We are breaking and rolling over on the right side of this channel. Oil still the wild card. I haven't traded the dollar CAD in quite a while. The reason why is dollar is still drifting, and the CAD is influenced by oil. Oil is still in a wedge or sideways. So until we see either the dollar make a move or oil make a move, this one's going to be a tough trade. I would like to see the dollar weaken enough that this ends up falling lower, and this would be 1, 2, 3, 4, 5 to the downside, but I don't know if we're going to get that trade. So I would rather say leave it alone for right now. If we have dollar sideways, oil sideways, why trade the dollar CAD? Because it's going to be a tough one to trade. All right, unless you want to get some day trading and look for some pivot opportunities or short term, but position wise and direction, I don't really have a clear sense of direction on dollar CAD right now. Dollar Swiss, we're back up towards 9,800. We came down last week and bounced right off those lows. I still want to buy this at low levels. I'm leaving it alone for right now. Dollar yen we did. Dollar peso, this was pretty wild and crazy. This was a few thousand pip gap. We gapped higher and ended up coming back down. If you look at the high from last night, it was a high around 20.11. Now, I am pretty certain that on my broker platform, I'm going to check this right now. I am like almost positive. Maybe it was 20.06. Yeah, it must have been 20.06. I'm going to check that. Let me check and see. 20, yep, so it was 20.06. That was the levels I was watching last night. Got up to 20.11. This ended up gapping higher, filling the gap and dropping. Oh, no big deal, 3,000 pips within, 5 or 6 hours. So take a look at the higher time frame. What are we doing on the dollar peso? I'd say that right now this does look to stay somewhat bullish unless we have this structure changing. We did break this high. If we stay slightly bullish, we can come up into this yellow box. That would be equal high, equal high, equal high. I would like to sell it from there. If we end up going back down, let's say this stays sideways. Let's say this stays sideways. We had a little fake out gap right there, and this comes back down. It's right now a bit of a toss-up trade with the dollar somewhat on the weaker side, but it's a higher volatility pair. If it's considered an exotic pair, you might not want to trade this one. I do like trading the peso with a nice clean setup. To me, my setup is here. I'm going to sell it high, or I'm going to stay out of it. This right now, I mean, we did have trades in here that we were buying. We made some profit right there. We were selling here. We bought it in here, took some profit. We've picked our battles very wisely, I think, and very tactfully with the dollar peso. Right now, if it's going to keep drifting higher, then let it, and then we'll sell it at a really nice high price. Let's see here. Dollar index, 12,392. We still didn't break the high from FOMC in July, but you notice that we're not coming back into the structure either. So the bears are reluctant to push this any lower. We're probably dealing with more sideways movement on the dollar index for right now. The DXY could be going up towards prices at 100.00. The dollar index continues to drift. We're not breaking. Again, the bears aren't really convincing us at all that we're going to break these levels. What I would like to see on the dollar index is this. If we can break and go lower, we need to take out these lows. Then we have room to fall. Without that confirmation, this is chop, chop, chop. All right? And that means we're dealing with sideways movement and chop on dollar pairs. Oil, 53.65. Volatility is going on, but this is support, this is resistance. We've got a wedge, but time is taking us on the right side of this wedge. But price is not breaking the lows at just above $50, and price is not breaking the highs just above $60. So that's my range right now. $50 support, $60 resistance, and it's a trader's market right now. If you want to buy this, then you buy it low, stop area, go after the highs. If you want to sell it, you sell it high, stop area above, go after the lows. And trade it until something more decisive happens. If you want to wait for something like a breakout, then sit on your hands and wait for a breakout. Gold and silver. Silver, 1766, straight up move. That's pretty nice to see. I'm long SLV. I've been long since last year. New highs in silver and gold is a good thing. Gold, 1527. We just spiked up last night during all that wild stuff happening that we had a high at 1551. Now, again, look at that indecision on gold. How does that finish tomorrow? Let's find out. If we end up pausing, I said this last week in the Outlook, if we end up pausing here, going higher and pausing is a good sign for more bullishness. Pausing here, going up with a big indecision candle, that could quickly recover and come back down into this area. So 1535 is a major breaking point for gold. If we can break and close above 1530, then there's room to go up. If it comes back down and closes, then correction is probably due on gold. All right, let's see here. Bitcoin back up to 10 plus, and Ripple hasn't moved. We're still at 26, 27 cents. So that is it. It's going to be a pretty wild week. It's our last week of August. This is the week of the 26th through the 30th. We're going into a holiday weekend with Labor Day on Monday the 2nd. We have a big calendar plan for next week. Let's take a look at this week's calendar. Not much. Okay, this is day 3 of G7. We have oil inventories, some news out of New Zealand and Australia, prelim GDP for the dollar on Thursday, GDP for the CAD on Friday, going into a holiday weekend. Next week, big deal, right? We have Monday, holiday, like I said, it's Labor Day, but we have cash rate decision for the Aussie, expected to stay the same at 1%. We have a Bank of Canada rate decision, hasn't been forecasted yet. I will be curious to see if they cut to 1.5, like all those central banks are doing right now. Will they cut rates? Then we have non-farm and CAD employment coming on Friday. So it's going to be a big way to kick off a kind of a holiday weekend, holiday hangover. What happens with the first week of September? Looking for some breakouts. Watch those JPY yellow boxes. They do mean a lot. My next big trade on the Japanese yen has to be a play on those yellow boxes. Until then, I'm staying out. Until then, I'm watching from the sidelines. I'm trying to ignore some of the noise. I'm trying to, not be scathed and bothered by, the emotional swings the market is seeing right now. And that's my approach. Just a quick repeat here, ways to follow me and get in touch with me. This is Instagram, pulver.chris, Twitter, @pulverchris, Facebook, just look up my name, as well as YouTube. Send me an email, cpulver@markettraders.com. Let's have a good week, traders. I'll see you in my trading room, see you in class, and happy trading, everybody. Talk soon, bye.